you're working hard in your business and it's finally gaining traction and making money, but you might be paying the IRS way too much. Today's video, we're going to review an S-Corp and how it could save you money so you stop tipping the IRS so much. Okay, so when is the time that you should make the S-Corp election for your LLC? Now let's take a step back. You went out on business on your own, maybe you're doing a side hustle and you establish your LLC and you're running your LLC. We're reporting our profit, our expenses, and we have a net profit, we're paying taxes. But now we're starting to make 40, 50,000 and the projections look good, like we're on an upward trajectory. We most definitely have to look for an S-Corp. And what an S-Corp essentially does is it tells the IRS that you're now wearing two hats. As a simple LLC with a Schedule C filing, you just wear one hat. You're the owner, you do the work, you do everything, one hat. Now with an S-Corp, we're going to separate the two. We're going to say you have a worker and you have an owner hat. Okay, so let's start off when you shouldn't do an S-Corp. And if you're making less than 50,000, your compliance and expenses are probably greater than your savings. So what are those expenses? Well, you have to file an additional tax return, 1120S. You have to run payroll, and you most definitely have additional accounting expenses. So if I can save you $2,000, but it's gonna cost you over $2,000, is that a good deal as a business owner? Of course not. But if you make over $50,000, then all of a sudden those savings are greater. So I can charge you $2,500, but you're gonna save $6,000. Sounds like a good deal, obviously. So that's where the difference lies. All right, so we talked about if you're under 50, why it probably doesn't make sense, but now you're making over 50, you're hustling, your business is growing. Remember, we're talking about net profit here. So if you're, say, a plumber and you make 50,000 gross, but you have all these expenses, not really what we're talking about. We're talking about net profit. So let's use a real estate agent. So I become a real estate agent. Year one, I make 20,000. Year two, I make 60,000, but with expenses and stuff, I'm under 50. Year three is where I break out. So I'm up to 150,000, and after expenses, let's just say I land at 100,000 net profit. At $100,000, I'm gonna save that self-employment tax. I'm gonna become an S-Corp, I'm gonna wear a worker hat where I pay myself a $50,000 salary, and then I'm gonna have that owner hat where I'm gonna receive $50,000 in owner distribution. So I'm gonna save upwards of $9,000 in taxes by doing the S-Corp. Now, what are the steps of doing that? Well, step one is you have to have an LLC to start. So you might have that LLC for weeks, months, years, maybe even a decade before you make an S-Corp election. Step two is to actually make the election. So you have the form 2553 that you fill out, you send to the IRS, and then you wait for the IRS to accept that election. Usually it takes about 60 days after submitting the 2553. Now, once you get that S-Corp approved by the IRS, you then need to set up payroll. Now, keep in mind that S-Corps have to have reasonable payroll, and what we see in our firm is a lot of times people don't have reasonable salary when it comes to their S-Corps. Either they're not taking compensation or their compensation is too low. And what is reasonable salary or compensation? Well, I usually use a rule of thumb about 40%. So if I make $100,000, I want to be between that $40,000 and $50,000 in compensation to consider it reasonable. Now, the next step is to actually set up that payroll. Now, we do that here at our firm. We fully support our clients in doing that, but you can use services like Gusto and obviously QuickBooks to actually have reasonable salary. And lastly, you have to file a tax return by March 15th for your S-Corp. And essentially what that means is you file 1120S by March 15th. That 1120S is going to issue a K1, which is your owner earnings for that year that you report on your personal tax return, and you'll have a W-2 through your payroll service. Now, I most definitely recommend you have a professional walk you through this for a lot of reasons. We've had people come to us and say, hey, I did my 2553, but the IRS rejected it because it wasn't filled out correctly, or I did it, I never heard from the IRS. We fully support our clients in making sure that this is implemented correctly. Secondly, you really need a good accountant to make sure that you're running payroll appropriately and you're doing tax planning. It's one thing to use a Gusto service to do your payroll, but are you really understanding your taxes and doing tax planning around this? And the payroll part's not even the hardest thing. The hardest thing is really doing the tax planning piece, mitigating your taxes, making sure you're not overpaying. In prior videos, we've talked about Gusto rule and accountable plan. And when you have that S-Corp, that's when these really powerful tools come into play to lower your tax liability and save you thousands. So if you want to know more about how to implement an S-Corp and whether it's right for you, give us a call. It's a free consultation. If you want more content like this, really illustrating what's good for your business and the timing, and some things are right for one business and not right for another, go ahead and click like and subscribe here or leave a comment and we'd be happy to get back with you.